Welcome back. Stocks have cooled off this morning. Of course, we're coming off a 4-day rally, but that rally followed a 6-week slump for the market. So where are stocks headed? Let's ask Doug Sandler. He's of Riverfront Investment Group, and he joins us this morning from Richmond, Virginia, and Dom Chu as well, as always, is here. And Doug, later this afternoon, Ben Bernanke may not have great things to say about the economy, but the last time you joined us, you said the best place for an investor to be is the stock market. Do you feel that way still now?
Yeah, still think that, and I think it's actually if you think of the last 6 weeks, we really had kind of a best case scenario, although it doesn't feel like it as an equity holder, and that is, 6 weeks ago, I'd say optimism was a little bit too high. I think we were running somewhere around a 30 to 40% annualized rate on the S&P 500 as far as the level of increase. We had most people kind of shrugging off Japan and Europe, thinking that it wasn't going to have a huge impact. And then we were sitting somewhere about 15% above the 200-day moving average, which tends to be a pretty vulnerable point. It's like operating without a safety net. Today, it's kind of the exact opposite. We've seen given back almost all the gains from the beginning of the year. We've had pessimism really drift in here, where everybody knows about Europe, everybody knows about the slowdown in Japan and slowdown in China, and I think we're really setting a stage here for another multi-week rally.
But I know the other thing you're doing, Doug, is just looking at specific stocks. You're not saying be in this sector or another sector. But here's the problem with that. I mean, if you look at the Dow, Dom, this year, you've made money on a stock like Pfizer or American Express or IBM, but you've lost money on Merck or JP Morgan or Microsoft. Now, from 10,000 feet, those seem like the same stocks, and yet they're all moving in different directions.
Well, that's the interesting part about this idea, John, is we have a lot of stock pickers out there who really are stock pickers, bottoms up. They look at the stocks individually on their merits, and then those people will look at the bottom or the top down, rather, looking at sectors and industries. Now, Doug, I guess the question is, I mean, we always talk about stock pickers market. It's become a cliche right now, but is it really about picking companies, so to speak, right now, or is the real focus on all the macro concerns? You got to be sector focused at this point.
I actually think it's the companies. People always say it's a stock picker's market because it's our job to pick stocks, but the reality is it really isn't always the case. Early innings of a bull market, you want to be kind of just a risk on, which means have more risk than your competitors, which means smaller cap, more cyclical. You get to the later innings, it becomes less of risk on, it becomes less of sector rotation, it becomes more of just is it a good company at a good price?
Doug, let's talk about a couple of companies that are in the news today. FedEx, for example. Dom highlighted at the start of the show, they came out with an outlook that seemed to please Wall Street. I think one of the stocks that you recently sold was UPS. Correct me if I'm wrong, but what's the story on UPS versus FedEx?
Well, UPS, great company, but relative strength laggard, meaning it wasn't helping our portfolios. It's also a company that really you want to own when it's time to be in the cyclical companies because you think they're going to outperform. Like I said, our view is a lot more about just owning a good company at a good price, and it doesn't really matter whether it's in the industrial sector or not. So we've pared back a number of our industrials that were simply in the portfolio to give us that market participation if the market continues to accelerate. Now that we think we're kind of in a boring but up stage, it comes down more to stock picking. So UPS was one of those companies that we tend to kind of dredge the bottom of the portfolio at regular intervals. And it was a great company that just wasn't performing, and we have a number of names out there like that in the S&P 500, great companies that just don't seem to be able to get on their feet, and UPS was one of them.
All right, Doug, thanks for the time. Doug Sandler joining us this morning from Richmond, Virginia, of Riverfront Investments.